Hello everyone. In this video series, we are going to start a new book, Masterclass with Super Investors. These are all great leaders in investing. It's written by Vishal Mittal, Saurabh Basrar. So we have covered a book for great super investors in the US. If you remember, that book was Richer, Wiser, Happier, right? And so now this is a new book, but now it's focused on leading investors in India. My brother Kashyap gave me this book as a gift, so I am doing this series with him, learning by chapter summary. So let's go into one of the chapters. I'm going to start with chapter 10, Shyam Sekhar. Shyam Sekhar is one of the key super investors in India, and let's look at a little bit about him on LinkedIn. He has a profile focused mainly on his own private equity and PMS funds. He started off as working at his own family company. He was a CEO of Western India Paint and Color, and then moved into equity, so engineering, and then focused on equity after that. He writes extensively and shares tweets on Twitter, so you can follow him on Twitter. Has now created extensive YouTube presence with I Thought Wealth, really good videos there that he shared. And his website, ithought.co.in, shares some of the services that they provide, and they have two PMS that people can use. I think the first one is let me see if I can show this one. The first one is Solitaire, and then there's Co-in. So they provide portfolio managed services as well. So now let's get into the chapter and see what are the key takeaways from Shyam Sekhar, right? His key edge is his deep, keen eye on balance sheets. So he really strongly believes in balance sheet based growth, and he has mastered the fact of how to look at companies from the balance sheet first, and things like working capital. He's very important for him because he has, remember, from the paints industry that he's worked at his own company. He knows about the pressures of working capital allocation, and the pressures that come from running a company. So he knows deeply about the importance of a strong balance sheet, knows how to read accounts initially, and even now I think he follows both the Fisher style and Graham style of investing. And because of his extensive 22 years into his family business, he has built a strong edge of knowing how to run a company. But at the same time, his edge initially was he bought a pretty significant software that helped him build a terminal, like a Bloomberg terminal. So almost like 10 lakh rupees. He spent almost like 20-30% of his saved up in savings into that. And so he believed in building an edge, like a true edge, where you have access to information, the software and the computer that he bought at the very early days when he started investing. So that's how he built his edge. He built his edge by strong accounting knowledge, strong real life experience, but also buying software and computer that gave him a faster edge towards information, data, and like faster access. His investment thesis is simple. He likes to buy dependable, solid franchises with strong management, have low debt, that's important, pay out dividend, and does good capital allocation. And so he thinks that growth from balance sheet and cash flows from operations is pretty important. Doesn't believe in high leverage and debt. And he thinks that 80% of decisions of equity allocation is in the balance sheet and 20% in the P&L. So the low PE stocks versus high growth stock, Graham, right, versus Fisher, right? He does both. He's fine with both. He still prefers the accounting as a big edge that he has. And he thinks that the source of value could be product enhancement, where you could build better products, or if you could have an advantage in terms of lower cost, or if you could sell at a higher price, right? There's an increased demand because your brand is better. So he clearly shared what are the sources of value. And he acknowledges that there's a very big difference between value creation and value capture. Not everyone who creates value can capture it, right? Like Apple does a pretty good job at value capture because of how much price they can charge of the premium. The cost of parts is much smaller. So they can actually create value and they can also capture it. His biggest learning, not to sell early, right? And he has this really good thing that I liked, which was he writes about a theme and its potential. Like, for example, GST, how that would have a consolidation from unorganized to organized players, cold storage, government's push for gas consumption. And he has this investor club, a group of trusted people that he discusses this for a long period of time, which is another key thing. He has this club of people that he discusses things with. And he shared a really good allocation strategy. He has a core portfolio, which is 70% of his holdings, and a satellite portfolio. Core portfolio is like maybe 7 to 10 companies, 10% each. And these companies, they just steadily compound. And in the satellite portfolio, 15 companies, 2% each. And he's evaluating when they'll graduate from the satellite portfolio to the core portfolio. And one other tip is he scales up regularly and he sells regularly. So if you want to build up, you don't have to have a high conviction you want to build right away. You slowly build up, like 2% position you buy and then slowly average up, and 2% position you slowly start selling. And if you do that every week, then you can slowly sell, not have to time it, and slowly build up. He has this thing that I didn't quite understand. He saves a lot of money and buys properties around Chennai area. And this really contradicts, because properties don't make real money. So he puts a lot of money and buys a lot of property. So that made no sense in his own personal capital allocation to me. Like, why would he buy property? So that's the key thing, which I would critique as to why is an equity asset gain being plowed into property, right? It should be the other way around. Like in India, it's like 85% of the wealth is captured in um, strong assets, like solid assets like property, gold, and very limited in finance. So if he's pivoting and has been focused on finance and equity, should be putting more on equity, right? So, but there is a huge component of property which didn't make sense to me. But he might be good at it, so that's to his advantage. He says the way to detect a bubble or the peak of the market is when everyone's has the same set of stocks in their portfolio. Good one, right? Good rule of thumb. And he buys at max 5% at cost, and then he lets them run. He believes in 10x in 10 years. So he's actually showed an example when 1993 to 2021, 10 lakhs became 100 crore, right? And a lot of investors are saying this, which is time in the market is very important. And so your investment behavior, your investor behavior, where you focus on things that you understand in your core competence, discipline of investing regularly, and building deep knowledge around hypothesis as to why you think this will do well, and not really rushing. Like, think about this is 30 years, right? So compounding is about time and not capital, which is the biggest learning from Shyam Sekhar. So overall, lot to learn. Go check out his website. I shared that. Get the key thing in summary is his edge, how he focused on building his edge, how he has this clear understanding of how he will allocate, how quickly he will allocate, how quickly he will add and remove, how slowly he will add and remove, what he uses with extra wealth that's created, and a key idea of equanimity and staying in for the long run. That's very important. So a lot to learn from Shyam Sekhar. Definitely go check out his website, ithought.co.in, which is this website. His YouTube channel, I Thought Wealth. a lot of really amazing videos, and he's been active, especially over the last 1 year. All of these videos have been created over the last 1 year, and quite good to learn from him. So I've subscribed recently, as you can see, and he has a Twitter channel and LinkedIn. He posts and is active on a lot of those public places. So Shyam Sekhar, I Thought Wealth, Great Learning, Chapter 10, Masterclass with Super Investors. Thanks.